Birmingham. That's what the invite said we were going to be talking about today, so we're going to stick to that. Lori's going to talk about all the things she's doing down in Birmingham. I'll talk about the market a little bit. What we're going to do is we're going to take questions at the conclusion of today's webinar. So if you have questions, if you look to the right of your screen, you have a dashboard. There's a little button there. It says questions. Just click on that button, and you can type your questions into the box. And we'll be glad to take your questions at the end of the webinar, but don't be shy to type those in at any time. Again, my name is Charlie Castro. I'm an independent acquisition specialist. What is that? What I basically do is I help people find investment real estate, whether it's an individual looking to buy one single family turnkey investment product, or whether it's a large hedge fund, real estate investment trust, or just a large group of investors looking to purchase bulk REO packages. Spent 25 years in telecom, back when there was such thing as telecom. I'm primarily doing mergers and acquisition. Had a lot of fun in that industry, been married for 22 years, 3 kids, so I'm quite busy. 2 of them are in college. I want to talk a little bit about what's going on in the housing market. Most of you know that if you follow the housing trends, you kind of know what's going on in the marketplace out there. We are seeing a recovery, a very rapid recovery now. This is from Case-Shiller. This is 1-year price gains from March of 2012 through 2013. You can see some of the cities on here and some of the price increases. Phoenix 22, San Francisco, Vegas, both up over 20%. Lloyd's market, Atlanta, Georgia, 19.6%, or 19.1%, excuse me. And Detroit, of all places, a bankrupt city, up 18.6%. Birmingham up 17.1%. I live in Orange County, California. I'm happy to say that I live in a county that's considered to be the most overpriced real estate market in the entire country. This was out of the Orange County Register last month, and it just said, yep, home prices are up double-digit rates, big deal. They're still way below the previous peak, and that's sort of what most investors are still currently looking at. They're looking at the fact that, yeah, we've seen some great appreciation in the marketplace. That's a great thing for those that have invested, but we're still way below the previous peak, and so values of homes are still extremely strong. Yep, we were going to see this eventually, weren't we? Interest rates did go up in June for the first time in quite a while. It was actually the largest largest weekly increase in more than 26 years, according to Freddie Mac. 0.53% increase in rate for the 30-year fixed rate home mortgage went up for the first time in quite a while. And of course, like a lot of you, I'm sure on this call, you remember the days when we were buying homes at 17, 18, 19% interest rates. So 4.46 is not exactly a terrible interest rate. I pulled this off just today. This is CNN Money, July 18th, saying that higher mortgage rates are not going to hurt recovery. That came from Fannie Mae researchers. Just said if history is any indication, the recent spike in mortgage rates is going to have little to no impact on home pricing, according to a new report from Freddie Mae. That's unique. Typically, you'll see that affect housing prices, but it doesn't appear it's going to affect. It says here actually no impact, virtually no impact on home prices. Foreclosures, interesting. CNN Money just this last month, July 11th, just about 3 weeks ago. Foreclosure levels have fallen to a pre-housing bust level. The long national foreclosure nightmare is nearing its end, with foreclosures finally exceeding their lowest levels since before the housing bust. We saw this drop. Total foreclosure filings, including notice of default, bankrupt possessions, etc., dropped 127,000 in June. That's a 35% decline from 12 months ago, and that came from Realty Track. Then overall filings hit their lowest monthly level since 2006. So we're seeing the housing recovery occur very rapidly. This is from the National Association of Realtors, and it just talks about how in 2012 we saw a 9% jump in housing prices. That's the largest increase we've seen in 5 years. And then home inventory levels hit a 5-year low in December 2012. There's a lot of reasons for that. We'll talk about that in a few slides here. Again, this is National Association of Realtors. 84% of agents believe that real estate values and number of transactions will increase in 2013. 77% believe that new construction will continue to climb. I think that's still fascinating. 74% believe that their local economy is going to improve in 2013 compared to 2012. In June, those didn't notice, in June, the federal government actually saw a surplus for the first time since I think it was 2002. It was $900 million surplus. That's an amazing statement to make. There's a lot of reasons for that, by the way. There's a lot of other things that went on that occurred that caused the government to be in the black, but the bottom line is the economy is certainly improving slowly. The housing market certainly has something to do with that. And then no market is expected to see a decline in home values or real estate transactions in 2013, where 1/3 of the market saw a decline in 2012. We believe that a lot of this has to do with the fact that we've seen private equity groups, hedge funds, real estate investment trusts. Most hedge fund managers today have some portion of their portfolio invested in real estate, and that's just a sort of a statement that speaks to the fact that real estate values are strong. Hedge fund managers see this market as an appreciating market. They see the value in the market. They see the market climbing back up. Certainly there's appreciation. There's monthly cash flow, good cash-on-cash return on your investment. There's some tax benefits there depending upon your own situation. But clearly, these hedge fund managers see an opportunity in the real estate market. And we believe that this sort of started back when Warren Buffett was interviewed by CNBC about a year and a half ago, and they asked him, is investing in single-family homes a good investment? He went on to say that, yeah, I would buy millions of single-family homes if I could, but that I wasn't very practical. And that sort of frames the issue for the smaller investor. Most folks understand, whether you're Warren Buffett or anybody else, any small investor, a hedge fund manager, that real estate is a strong investment in this marketplace. The question is, can you find the right entity to help you manage the business? That's really what it comes down to. The management team that identifies the property, that does the rehab work, that identifies the tenant, that does all those things. Those are the key components to being successful in real estate. Warren Buffett was just basically saying, hey, I don't have that skill set. I'm not a contractor. I'm not good at that. But knowing that the market was strong, Warren Buffett did then go out and purchase Prudential Real Estate. So everyone recognizes, or most investors recognize, this is a good market. The question becomes is, are you able to identify the proper partner to help you do all the things that have to be done to make it work? If you don't know who Blackstone is, they are the largest owner of single-family residences in the United States. They are a hedge fund. We have done some business with them. This article was just posted just earlier this month. They asked if they were pulling out of buying single-family homes, and he says, nope, we're not done yet. And their strategy should be something you should consider for your strategy. Isolate a key market for growth, have the properties renovating, and then rent them out for a long-term buy and hold type of business. Now, buying and flipping is back. There's no question about that. We saw more buys and flips in the last 6 months than we had all of 2012 combined. But most groups that invest in this market buy with a buy and hold strategy in mind, and as does Blackstone. That's their strategy. We just began working with Chinese investors about 6 weeks ago. We've now learned that they are in the single-family residence market. We've always known the Chinese were in the real estate market, but generally they focused on commercial and hospitality. But now they're focusing in on single-family residences. They recently invested $500 million in Blackstone to buy single-family residences. We actually have a group going down in about 2 weeks down to Birmingham to see our operation down there. A group of Chinese folks, they want to go kick the tires before they invest in that market. But the Chinese investor is heavily now invested into the single-family residence market. So one of the questions you have to ask yourself is, so where do you invest? And this is Lori's strategy. I'm just going to go through the slide real quickly. You want to follow the money. Cities that have hard falls but are recovering. Looking for net flow of people moving in. Cost of living, affordable cost of living is critically important. Friendly to businesses and friendly to landlords. Is there job creation? Is there government focus? Quality of higher education, quality of transportation, industries for the future. These are all a formula that Summit Assets Group will use when analyzing a market. The market that they've currently chosen to dive into is Birmingham, Alabama, and I'll talk a little bit about Birmingham. I pulled this off the internet about a month ago. This is an article in the New York Times about Birmingham. Birmingham was once known as primarily a steel city. Most Americans know Birmingham for the beginning of the civil rights movement back in the early 60s. Was never much of a white-collar type of a community. It's actually the 9th largest city in America. But Birmingham has gotten hot. I'm just going to go through a few slides here. If everyone wants to have a copy of this entire article in the New York Times, I'd be glad to send it to you. It was a really cool article. It just talks about Birmingham, all the things going on in the downtown area. Believe it or not, there's 5-star rated restaurants and whatnot downtown there now. There's more of a preponderance of medical and financial businesses there than there's ever been. The Birmingham Chamber of Commerce released a statement about 8 weeks ago and said that they had more investment dollars in Birmingham in 2012 than at any time in their history. So Birmingham Birmingham all of a sudden is a market that's really on the move. CNN Money names it the 10th best overall real estate market in the country and the 3rd fastest growing real estate market in the nation. New Wire Investor, which is an indicator that we follow, did a study in the top 10 best cash flow markets in the U.S. Birmingham was 3rd. Just to give you an idea, an ROI in Birmingham, cash on cash, is going to look something like 10 to 12, 13%. In some other markets in the country, you'll see 8 to 10%. In Southern California, you'll see about 4 to 6% cash on cash. And you have to compare that then with appreciation. There's some markets that have strong appreciation, some don't have such a strong level of appreciation. Birmingham saw a 17% increase in sales prices last year. We've seen sales prices already jump in 2013 in Birmingham. A lot of that has to do with the revitalization of the downtown district. Birmingham is really doing a lot downtown to revitalize that whole area down there. Known by many experts and publications as one of the nation's most livable cities. As I said, recent development downtown. They developed a world-class culinary scene. More green space per capita than any other city in the nation. Very interesting. Ranks 13 among the largest southeastern metropolitan areas. The downtown, I talked a lot about the downtown area. There's a couple photographs here. To the right, that's some construction going on. They're actually building a state-of-the-art minor league baseball stadium there. Some of you may recall Michael Jordan, when he retired from basketball, he played baseball for a few years, and he actually played for the Birmingham Barons. Well, that's the team that they're moving downtown. This whole area here is going to be a state-of-the-art baseball facility, which is going to bring a lot of action to the downtown area. Lots of work going on there with regards to schools and parks and whatnot. It's one of the largest cities, Birmingham is the largest city in the state of Alabama, rated as one of the best places to work. Been ranked 2nd in the nation for building personal net worth based on local salary rates, living expenses, and unemployment rate. That's a pretty powerful statement right there. A lot of disposable income there in Birmingham. Birmingham is rated as one of the most important business centers in the southeastern U.S., one of the largest banking centers in the U.S. They're investing over $1 billion to revitalize the downtown. That's what I was talking about, that mixed-use entertainment district. But it was the economy there was transformed by investments in biotechnology and medical research. So it's really not so much of a blue-collar town. It's really become more of a white-collar environment, and the real estate market there is reflecting in what's going on in the overall economy. I pulled this off just a few months ago talking about how housing prices jumped almost 3% in February, but this graph here gives you a good indication of where the market's been. These green lines indicate sales prices, and this red line indicates inventory levels. And you can see the market sort of peaked in terms of value in 05, 06, 07 in the crash, and you saw the gradual decline of value in homes down to where you saw them hit their lowest levels in 2011, and then you start to see a climb, 2012 and 2013. And then look at inventory levels. Obviously, the inventory level is extremely high right here in 2008. Then they start to fall. And that fall sort of indicates people are looking at Birmingham as a place to invest. Most of the money that we see in the real estate market today is really being injected into the market through hedge funds, these real estate investment trusts I talked about. Over $900 million has been allocated by these institutional investors in 2013 to invest in single-family residences, and that is the reason why you're seeing a decline in housing prices. That, of course, and the fact that we're seeing less and less foreclosures hit the market. So with that, I want to thank again everybody for being here today. I'm going to turn it over now to Lori Graymont with Summit Assets Group. We're going to hand Lori the controls. I want to remind everybody that, again, at the conclusion of the webinar, we're going to take questions. So if you just, again, hit that little question button to the right of your screen there. You can type your questions in there. We'll be glad to talk to you and answer your questions. Additionally, we will leave all of our contact information on the screen so that after the webinar, if you have questions, you want to talk to myself or Lori, you're free to just give us a call. So with that, Lori, again, thanks for being here.
Charlie, thank you for such a great education on everything that's going on in Birmingham. It's part of why I love that city. So as Charlie mentioned, I am a host of a real estate show, Real Estate 360. We're on the Wall Street Journal radio. I grew up in an environment of real estate, so I've been around it pretty much my whole life, and I've done everything from single-family, multifamily to land development. And so one of the things I learned through all of the real estate and all the years is how to assess a marketplace for the direction it's going. While it would be great to get in at the bottom and get out at the top, I don't like to take the chance of missing either of those, and so I always look at the trend. Are things moving in an upward direction, or are things moving in a downward direction? And get in the middle and get out in the middle, and you still make plenty of profit. So that's what we do. We go and we find markets that are just about ready to explode, and then we bring them to our investors as cash flow marketplaces. So Summit, we provide single-family investment properties. We provide them turnkey to our clients. So they have renters, and we have the property management in place. We look for quality homes in quality and stable neighborhoods. While there are many opportunities out there to go ahead and buy cheap homes, even in today's market, we look for homes that are going to hold value and appreciate in the future. So we provide quality, cash flow properties. We also provide note investments. So there's some investors out there that don't want to own real estate, but they want to earn on it. And so we do provide note investments. And we also educate and coach the investors that want to be active investors. Since 2009, we've bought and sold over 1,400 homes in the nation here. So we do have experience in many different marketplaces. What Summit brings to the table is experience. With the whole team that we have in place, we have well over 65 years of experience. On the ground, we have over 40 team members that help with our rehabs and taking care of the properties. And last year we did about 45 properties. This year alone we're well over 100 and we're halfway through the year. So the volume has definitely picked up. And with the experience, what we bring is peace of mind, because we know how to identify and avoid the known risks. We also employ the best practices to avoid creating risks. And because we are connected with top professionals, we know how to navigate the unknown risks that appear. The way our process works is we locate a property. We determine the viability of it in the rental market. If it's not going to work as a rental, then there's no sense buying the property, because that's what we're using. The whole idea of the turnkey is that we're going to rent it. So we make our offer conditional on inspections. We have our contractors go out and inspect it for repairs. And if it looks like the property is going to be worth the value, we go ahead and buy it. And we set up curb appeal right away when we start doing our rehabs, and we start marketing for renters. We do our repairs, and then when the repairs are completed, we have a licensed inspector go out and inspect the property and give us the thumbs up that the property is safe and it's clean and it's repaired the way that we would want it repaired. When we're trying to find a tenant, we want to make sure that we find tenants that stay a long time. One of the biggest costs in owning a rental property is turnover, and that's the last thing that we want to do, is have a client have turnover. So we screen our tenants well. We look at whether they have 3 times their income in the rent. But it's not just their gross income. We look at their net income. What are they bringing home, and is it 3 times the rent? We look at whether they've had foreclosures or evictions on their history. And anyone that's had an eviction in the last 5 years, we don't accept. And then we call previous landlords, not just the one that they're living with, because maybe they want to get rid of them. We call the landlords before them. When the tenant moves in, we do an inspection, and then we go back 90 days later and we inspect the property to make sure they're still taking care of it. And we handle all repair claims immediately. We have systems where they can enter them in online. Every home we sell comes with a home warranty. And so as a property manager, we work with the home warranty company, and that helps reduce any cost of any repairs that might come to you. We communicate with our owners every month, and this is a key piece. I have owned properties, and I've had property managers for years, and I've never had a property manager call me or talk to me every month. Instead, they send out the statement, and then I never hear anything. And so one of the things we wanted to do is make sure that our investors treat this as an investment. The statements do come out every month. They come to your email every month. But what we do is we take the extra step. We call you. We ask you if you received it. We ask you if you reviewed it, which is really important. Did you look to see if you're making money? And then we ask if there's any questions or concerns you have, because we want to be your one-stop shop. In addition, we have people drive by the properties every month just to make sure they all look good. Our process for selling our homes is that we sell in a 15-day escrow, usually for cash. The price of the homes is reasonable. Most people buy them cash rather than trying to get a loan, but we do allow financing. We require a $5,000 deposit that's refundable in the first 10 days, no questions asked. So that gives you 10 days to do an inspection, to think about it, to make a trip out if you want. But we don't ask any questions. If you just decide at the end of 10 days you don't want to do it, you can get your $5,000 back. We offer a home warranty on all of our homes. You get 12 months seller-paid home warranty, plus we warrant any of the work that we do. We basically are your one-stop shop. You call us, we'll fix it, or we'll call the right person to fix it. So I want to share with you some of the properties that we have available in Birmingham, and these are just some samples. So if you have interest in these and you want to see if there's anything else, just give us a call. This one here in Allison Bonnet, it's a nice house. It's about 1,500 square feet, 3-bedroom, 2-bath. And you can see here that it's for sale for $92,000. Your rent, your monthly rent on that is $1,150. So that is just an excellent ratio, rent ratio to price. Now these homes are usually priced below market. So in the marketplace, you'd see that this house maybe is worth $95,000, $98,000, and you're getting rents at $1,150 per month. Here's another one on Creek Lane. This one here is for sale for $93,000. I see that the number's not there, but it is $93,000, and the projected rent on it is $1,320. So that's almost a 12% return on your investment. And these are not houses that are in the hood. Let me be clear. We're buying in the suburbs. We're buying in places that are safe, places that have got good schools, places that are desirable for first-time home buyers and mover-up home buyers. And the reason that's important is because your exit may be that you want to sell it. If you want to sell it, the question is, do you want to sell it to a homeowner or another investor? You know, if you're selling it to another investor, they're going to want a discount. They're going to want to get the best price. If you're selling it to a homeowner, they buy on emotion. And so you usually can sell it for a lot more. So we want to make sure that, one, it can be rented, and two, that it can be resold at more than what you're paying for it. So here's another one. Obviously, these pictures are before rehab, and this one's selling for $93,000, and it's renting for $1,200. So again, that's a 10% return on investment. So it comes down to, what is your plan? You know, one of the things that's really critical for us, we don't just send our list out. We want to talk to you. We want to find out, what is your goal. Are you looking for monthly income, or are you looking for equity growth, or a little bit of both? Are you a conservative investor, or are you aggressive, or are you in the middle? Are you looking for short-term or long-term? And for those of you in California, I have to clarify, long-term does not mean 1 year. I go to conferences and I talk to people and they're like, yeah, I'm in it for the long term. I'll be out next year. No, long term is 3 to 5 years. Do you care where the property is? Do you want it in a lower end neighborhood, or are you looking for pride of ownership? Are you in single family? Are you looking for multifamily or syndication? And do you want to self-manage, or do you want to have a professional management team take care of it? All these questions play into giving you the right investment that fits your goals. Most of the clients that we talk to fit this profile. If you don't, that's fine. Just call us, because we've got many other things that we can offer. But most of them are looking for equity growth. They want to make sure that their buying value of the dollar does not get eroded. And real estate has proven year over year that when you invested in real estate, you are going to keep up or grow faster than the rate of inflation. The risk tolerance is usually conservative. The investment term is usually 3 to 5 years. They want pride of ownership. They want to be able to kind of brag, hey, look, I've got all these houses. Usually single family is a comfort level, because that's what most of us live in, and so it's something that's comfortable. And most people prefer professional management because they're working full time. You know, our goal at Summit is to make sure that you have zero headaches. We want to take care of the whole picture for you. So I wanted to just kind of show you some samples of why we really think now is the right time. If you were to go out and figure out how much it would cost to build a house, let's say a house that's 1,700 square feet, like our example, it's $93,000 is what we're selling it for. If you were to rebuild that cost or that house from scratch, it would cost you anywhere from $78 to $105 a square foot. So that comes out to $156,000 up to $212,000. We're selling it to you basically at half cost, $54 a square foot, and it cash flows. So when people ask me, is it too late to get in? You know, it seems like prices are going up. It's not too late to get in. There's a couple things to look at. One, what is the cost to rebuild? Everything always reverts to the mean, the median. What does it cost? You can't keep selling houses for less than what it costs to rebuild and not run out. I mean, you're going to run out of houses. So eventually prices will go up more. If you look at the inventory, there's less than 2 months of inventory listed. Banks are not foreclosing. Hedge funds are looking into secondary markets such as Birmingham. And there hasn't been any building for 6 years. So this is putting pressure on what is out there, and it's pushing prices up. So when you buy, you want to buy in a trend of it trending up. And when you sell, you want to sell in a trending up. So we're at the bottom of the trending up. You saw that with Charlie's charts. So now is the time to get in. So here again, I just don't want to see people miss this. You know, would it have been better to get in a few years ago? Yes. Is it too late now? No. You need to take action. You know, if you hear me talk on the radio, I talk about how I want to see you make 2013 make a difference in your life. It's my make a difference year. I want you to take action. You know, I'm showing you here that prices are still 60 to 80% of replacement cost. Interest rates are still at historic lows. Lenders are getting more relaxed, and so they're giving out more loans. Rents are expected to increase. Shortage of inventory is still existent, and prices are still affordable. So it makes sense to go ahead and invest, and we're showing you an opportunity that we found in Birmingham. So here's our contact information, and as Charlie mentioned, on the right-hand side, you can type in questions. And Charlie, I turn it back over to you.
Well, thanks so much for that, Lori. We've already got questions in the queue, so I'll just get started here. When you repair, do you do it renting standards or retail standards, and how do you determine what you will repair and won't?
Okay, so we have it inspected before we buy it, and we first look at deferred maintenance, and then we look at safety hazardous type items. Those always get repaired first. And then we look at the cosmetics, because the thing that's going to rent it fast is having fresh paint, you know, clean, fresh carpet, having curb appeal. And so we look at those things. We fix our homes to a retail standard, not to a rent-ready. Your rent-ready is put as little in as you can in order to get it rented, but that doesn't necessarily mean you're going to get the best return on your money, because maybe it rents, but it rents for less than the $1,150, and maybe it rents for $900, or maybe it sits on the market for 3 months before it rents. And so the system we have is we fix it retail ready, we make it look beautiful, and they rent quickly.
Okay, next question is, Lori, you have an upcoming Atlanta property tour in September. Will it be possible to pay a visit to Birmingham and see these homes as well? And Lori, you might want to start, just explain to everybody else on the line what your tour is coming up in Atlanta in September.
Sure. So we do a property tour 2 times a year where we put together an event. You fly in and you attend a welcome event on Friday evening. And then Saturday we have a small educational part. We take you out, we show you the properties, and then in the evening you get to meet our on-the-ground crews, like our rehab teams, our inspectors, everybody. We basically open our black book and we share it with you in person. You get to meet them. So we put that together. You can see more about it out on our website, and we are open for registration right now for that. Now, what we have planned is an unofficial trip to Birmingham. So if you register for the Atlanta tour, when we contact you, you just need to let us know that you want to go to Birmingham, and we're going to rent a van, and we're going to drive over to Birmingham and show off some of our houses there. The reason we're doing it as unofficial is just because it's 2 hours away, and we're just going to drive over, show you the houses, and drive back. Some people leave on Sunday, but I know I've had requests for a couple people that already own properties in Atlanta if they could also see Birmingham. So we do have that option. And again, as we call you to follow up from your registration, you can let us know you have interest, and we'll put you on the list.
Lori, will you be taking a trip over to Birmingham? Is it something you can think you can possibly do?
Oh yeah, absolutely, absolutely. Yes, the Atlanta tour is September 6th and 7th, which is Friday and Saturday, and then the Birmingham we're going to go over on that Sunday.
Okay, next question. How much is spent on rehab? For example, if a house is sold for $93,000, what would the final price be?
Okay, the final price is actually the $93,000. So there's no additional amount that has to come in. That is the final price. That includes the rehab. Rehabs on our houses sometimes are minimal, like $10,000. That's a small rehab for us. And sometimes they're major, like $35,000. So anywhere from $10,000 to $35,000 is what we spend on the rehab. So when you see a price from us, like the $93,000, that is rehabbed already.
Okay, a couple questions we've been asked a couple times. The answer is yes, we did record this webinar today. We will be sending you a copy of that YouTube video sometime late today or tomorrow. It typically takes a couple hours to upload into YouTube, so it'll take a little while. But we will send, whoever wants a copy of the video, let us know. We'll be glad to send it to you. And somebody else asked a question here about lists of homes. We have an inventory list that we can go over with you. Lori typically does have inventory available. What we typically like to do is, and correct me if I'm wrong here, Lori, but talking to the client prior to sending out a list is helpful because we want to get to better know, what your goals are, what kind of money you're looking to invest. We want to be able to, put you into something that fits your particular set of circumstances. So we'd like to get a little bit of information first, and then yes, we can certainly send you out a list of available properties. And then the next question is, how does owning a $100,000 rental property affect my taxes?
Well, everybody's situation is different, and I'm not a tax accountant, so I don't know exactly how to answer it. It really depends on whether you're classified as an active investor or passive investor on how it comes through on your tax return. Typically, it shows as a way for you to shelter some income, but that's something I would ask that you talk to a tax professional on.
That's a good answer, Lori. That's the right answer. Do you offer information on an overview on the neighborhoods where you sell?
I guess I would have to know what more of an overview. I can get my guys on the ground to write an overview. Pretty much everything you can find on the internet's available. You can just type in the address, and there's overview information out there.
Lori, I think the best way to answer that is, I think what this gentleman's asking is, when you buy a house, and I know you do this because we work together on the wholesale side as well, when you look to buy a property, you know going into it what the schools are like, what the crime rates are like, that sort of thing.
Yeah. Yeah, and all of that's out on the public domain. You can find it usually in Zillow, Trulia, different websites. And so if you ask us, we'll share what we know, and then we encourage everybody to do their own due diligence. When you buy a house from us, we encourage you to go ahead and have it inspected. I have to tell you, we sell hundreds of homes, and I would say 99% of my buyers do not go out and look at their homes on their own. And the reason they don't is because they realize that it makes sense to go ahead and hire a professional inspector, somebody who's in the business to inspect the property and give feedback. And if it's cash flowing, that's the whole idea. We're not moving into a home, we're buying an investment. So we encourage you to research, to learn everything you can. If you want to go see it, we encourage you to go see it. We want you to be an educated buyer. I just want you to know that there are professionals who can help you be educated buyers, such as property inspectors.
That's actually interesting, Lori. As you were answering that question, somebody asked almost the same question. I'll just read it to you. You can just give this another slant to that answer. Are the home inspectors that one would hire to inspect a property, are they certified, and if so, by whom?
Yeah, usually the state or the city certifies them, depending on which area. In the Georgia area, it's a state certification. In Alabama, my understanding is it's also state certification, and they're licensed to do that. You know, they have to have a license to do the inspections. Well, they don't have to. Some can do it without a license, but we use licensed inspectors.
Do I have another one there? Yeah, we do. Okay, Lori, got one more question here.
Okay.
Better to buy a house cash, full price, or leverage with loans and buy two houses, and at what point the interest of the loans make it not profitable?
Well, okay, so everybody's situation is different, and so for me to say what's better, there really is no better. You know, there's people who like to be a little more aggressive, and going in on a loan at 75% loan to value is completely comfortable for them. They have no issues covering the mortgage payment if there's a vacancy. There's other people who really don't like the idea of having the noose called a mortgage, and so they like to pay cash and know that that cash flow is going to come in, and if the place is empty, you know, it really is no big deal because they don't have a mortgage payment to pay. So it really comes down to what is your goal, where you're trying to get to, and when you call us, we can help you with that.
A couple things I want to announce here as we're waiting for more questions. Lori has a couple more webinars coming up. Lori, you might want to talk about some of the things you have coming up, and especially with regards to Brian Davis with Act Plan. I believe we have one coming up with him, and that's a good one to attend to if you're looking to, you know, invest in your 401k or your self-directed IRA. I'd highly recommend being on that one. Lori, I don't have that date in front of me. Do you recall what that date is on that one?
Yeah, it's Wednesday, I believe the 14th at 3 o'clock and the 15th at noon, Thursday the 15th at noon. Okay, so tomorrow at noon we're going to be talking about how you finance or fund long-term holds, and we're going to go through different options. And then we repeat that same one next week at 3 o'clock and at noon again. 3 o'clock on Wednesday, noon on Thursday. And then the following week when we have Brian, 3 o'clock on Wednesday, noon on Thursday.
And everyone be on the lookout. You have to be on the lookout for those invites. They will be going out. So I don't see any more questions here.
You know, Charlie, I also encourage people to share this information. You know, if they want to share it with some friends so they don't have to regurgitate it, just make sure and send the invites that you're getting out to people. These are free. You know, it's free education.
Okay, there's two more questions here, Laura. I'll answer the first one. I'll give you yours first, Laura. What's the cost for an inspection? And the next question is, do you have business contacts help consumers obtain non-recourse loans? Okay, we've talked about non-recourse loans for a while now. We actually had a couple of webinars several months ago with a couple of groups that we thought were the best that we could find. And I spent probably 2 months talking to different groups. And to be really candid, I have not found a group that I believe is a good fit for anyone. Now, having said that, I've recently come into contact with a new group that's actually doing a webinar, Lori, with Brian Davis, I think tomorrow or the next day, that does lending for this sort of thing. So we're doing some due diligence on them now, and as soon as we have what we feel is a reputable non-recourse lender whose fees don't kill you, that makes sense to buy a property under $100,000, believe me, we will have a webinar. We will have them on as our guests. We ask this question all the time. But one thing we don't want to do is refer somebody out just to refer somebody out. We have not seen great results from some of these groups. I'll leave it at that. And Lori, what's the cost for an inspection?
Yeah, so depending on the inspector, it's anywhere from $275 to $450.
Lori, is the 8% vacancy cost too high, and how is that determined?
So the 8% is market vacancy. In Atlanta, we actually adjusted our vacancy down to 5% just because we're seeing better than market success with our homes. So it's just put in there based on market to help people plan and expect that there may be a vacancy, a turnover. 8% is about a month and a half worth of income.
Okay, next question is, what's a non-recourse loan? A non-recourse loan is just really kind of what it sounds like. It means the lender has no recourse if you default. They'll take your house, but they can't come after you. So a non-recourse loan just means there's no recourse on the part of the lender to the borrower. Next question is, Lori, it's for you. Atlanta or Birmingham? Which, in your opinion, what's the better investment?
Both. You know, anybody who knows me knows that I'm a both and girl. I want my cake and I want to eat it too. If you have to pick one over the other, it really is going to depend on what your investment goals are. If you're looking more for equity growth, then I definitely would go into Atlanta. If you're looking for more of a solid cash flow, long-term, steady Freddy, I would be in Birmingham any day, any day. That market is cash flow king.
Yeah, just to tag on to that, if you recall one of my early slides, we talked about New Wire Investor, and they called Birmingham the third best cash flowing market in the nation. And Lori's right on the money. In Birmingham, you're going to look at returns from 10 to 13, up to 13, 14, even 15 points. That's cash on cash, monthly rate of return on your money. Now your appreciation is going to vary. I mean, last year, for example, prices went up 17%. So there was a nice rate of appreciation in Birmingham. What is it going to be this year? I probably was going to guess that they right around that area, 15, 16%, somewhere in there.
Yep.
Atlanta, on the other hand, you're not going to see as great a cash-on-cash rate of return. Pricing is generally going to be a little bit higher in Atlanta. Your rates of return will be a little bit lower. But then conversely, for appreciation in Atlanta, you've got some pockets there that are just skyrocketing. It's a market that's appreciating in a lot of pockets there. So Lori's absolutely right. Yeah, depending upon what you're looking for, that will determine which is your best market. Okay, someone just asked a question and I can't answer, and I should know this. What were the first and second best markets according to New Wire? I believe they were in the Carolinas, if I remember correctly. Lori, do you know the answer to that?
I don't.
Yeah, I think if I remember correctly, I think one of the markets was in the Carolinas someplace, and I can't recall what the other one was, but I will find out. I'll have it on my next webinar.
Yeah, stay tuned.
Stay tuned. Come back again. I'll have that answer for you in the next webinar. Okay. If there are no more questions, I will say thank you for everyone for being here. Look forward to having you on the next one. We've left our numbers up here on the screen for quite a while. So if you've got questions, please feel free to call myself or Lori. We want to thank you being here today and be on the lookout for our next invitations. And Lori, again, thank you so much for all that information.
Thank you, Charlie, and thank you, everyone, for your time.
Okay, we had another question here. Lori, you still there?
I'm here.
Okay, what kind of loans are offered to small investors and what rate is expected?
So if you have less than 4 loans, so that includes your primary residence, you can get funded at 75% loan to value, so whatever the value is, 75% of that. And the rates are typically 1% more than what you're seeing for homeowners. So if the homeowner rate is 4%, you're going to see 5%, and you can get in at 25% down.
Okay, and for those that are still on that want to hear who the top 10 best cash flow markets are, number 1 was actually Rochester, New York. Interesting, because those homes there, Lori, got to be in the 200 minimum, I would think. Number 2 is Montgomery, Alabama. Number 3 is Birmingham. Scroll down. And then number 4 is San Antonio. 5 is Garland, Texas. 6 is Buffalo, New York. 7 is Corpus Christi, Texas. And 8 is Freeport, Louisiana. Number 9 is Detroit, believe it or not. And number 10 is Philadelphia.
There we go.
Can a loan be taken in the name of a corporation?
No. You would have to work with a commercial lender, and typically commercial lenders will not lend to this lower portion. You can consult an attorney on how to make that happen. Usually you have to do it in your personal name and then work with the attorney to get it into the corporation.
Okay, Lori, so I got questions coming in here. How much insurance do I have to put in to my investment property?
Well, it depends. If you're buying it all cash, you don't have to have any insurance. If you are taking a loan out, a commercial loan or conventional loan, not commercial, if it's a conventional loan, the lender is going to ask you to insure it for replacement costs.
Okay, Lori, I think that might be it.
Okay.
I want to thank everybody for being here again today. And again, our numbers have been up here, so if you've got any questions, feel free to call us. So again, I want to thank everybody for being on today. And Lori, thank you, and we'll look forward to talking to you all soon.
All right, bye-bye.